to this week's Money Metals podcast, helping gold and silver investors during these turbulent times. Now, this week's market wrap with commentary and analysis from Money Metals Exchange, the company named Best Overall Precious Metals Dealer by Investopedia.
Welcome to this week's Market Wrap podcast. This is Stefan Gleason. Well, precious metals markets are continuing to probe for support levels as the summer doldrums are setting in. Gold futures tested the $1,900 level on Thursday before getting a bit of a bounce. As of this Friday recording, the monetary metal checks in at $19.28 per ounce, up slightly for the week. Silver, meanwhile, is outperforming. The white metal is up 2% this week to trade at $22.98 an ounce. Turning to the platinum group metals, they've gotten clobbered in recent weeks. Platinum prices are heading for a 1% decline since last Friday's close to trade at $9.20. And finally, palladium is posting a 2% weekly loss to come in at $12.78 per ounce. Investors are bracing for the likelihood of still higher interest rates. The Federal Reserve appears poised to hike twice more at upcoming policy meetings. Bond market futures suggest the Fed won't be able to keep rates at elevated levels for long. It will likely reverse course and begin cutting as soon as the economy turns down or Wall Street tanks. But for now, the interest rate sensitive assets are vulnerable to being marked down. Alarm bells are ringing in the housing sector in particular. With national average mortgage rates heading above 7%, a housing affordability crisis threatens to weigh on prices. We're currently seeing a massive decline in revenues for vacation rentals in formerly hot markets. Following the pandemic lockdowns of 2020, large numbers of Americans began listing properties on short-term rental sites such as Airbnb, but that boom is now going bust. Leveraged vacation properties that now aren't generating enough revenue even to cover mortgage payments represent a potential wave of forced liquidation sales coming in the real estate market. A home is a real asset that does offer some protection from inflation, but it's not tantamount to money in the bank. Real estate investments carry liabilities and risks that hard money in the form of physical precious metals do not. Residential and commercial properties exact ongoing ownership costs, including insurance, maintenance, repairs, HOA fees, property taxes, and typically mortgage interest as well. An unleveraged position in gold and silver bullion carries no such costs. Those who opt to have their metals stored in a secure facility, such as Money Metals Depository, will have to pay a small storage fee, which includes insurance. But the costs of storing through Money Metals Depository are less than the fees charged by a typical mutual fund. Many Americans falsely believe that if they achieve the dream of owning their home free and clear, they will be set up for the rest of their life through retirement. Unfortunately, some retirees who have no mortgage payment are finding that they can no longer afford to live in their own homes as inflation raises the cost of insurance and property taxes skyrocket. Instead of being an asset, a home can become a liability, even in an up market for real estate values. And in a down market, illiquidity can make a home difficult to sell. By contrast, retail gold and silver products are highly liquid and can be unloaded almost instantly at prevailing market prices. Of course, precious metals markets will have their ups and downs and are not without risk. But as part of a diversified portfolio of assets, gold and silver fulfill the unique role of hard money, a role that no other asset class, tangible or otherwise, can replicate. Before closing out today's podcast, I want to mention that we've just published our summer 2023 issue of Money Metals Insider. It's a free benefit for all of our valued listeners, customers, and readers. This special newsletter is packed with actionable information about the markets, plus details on some special offerings from the top-rated precious metals dealer in the United States. Leading off our summer newsletter, we discuss the large negative divergence in the silver price as compared to the gold price, and what that may mean for silver's relative performance from here. Plus, we report on a new effort by Rep. Alex Mooney, Republican of West Virginia, a sound money champion, to stop the Federal Reserve from pursuing a totalitarian, privacy-crushing central bank digital currency scheme. Precious metals investors will definitely want to hear more about what's happening with this. Meanwhile, we outline the top 5 reasons why young people would be smart to put aside their gadgets for a moment and get involved in the gold market. And don't miss our highly popular Q&A feature. You can access and download our latest Money Metals Insider newsletter simply by visiting moneymetals.com. Well, that will do it for this week. From all of us at Money Metals, have a great weekend and a relaxing July 4th.
Thank you for joining us for this week's Money Metals podcast. Be sure to come back next week. And don't forget to subscribe to our podcast through iTunes. For answers to all of your questions, or to discreetly and securely buy or sell gold or silver coins, bars, and rounds, call 1-800-800-1865 or visit www.moneymetals.com. Our knowledgeable and no-pressure specialists are standing by to answer your call during business hours, Monday through Saturday. Or you can lock in your order online, 24 hours a day, 7 days a week. Again, visit us at www.moneymetals.com or call 1-800-800-1865.